this opportunity right now where you've got physicians, dentists, veterinarians, and they have the need to borrow money. And they're amongst the most successful professionals right now, especially the dentists. And I think I might have told you this. I've worked a lot with dentists. I've worked with dentists since 1990. And I've written books for dentists, and I've got worked with thousands of dentists, literally at least 3,000 dentists, and know a lot about dentists. And I know that this product that we're going to talk about is going to be great for you when you're talking to dentists, and we can help you with get into the door with them, and they're very excited about it. And we have had students that have been quite successful with this. So I think it's going to be good. And it's not just dentists. It's all kinds of doctors, physicians, veterinarians, and so forth. But I think the dentists are the best opportunity right now because why? Dentists are the most affluent, highest paid of the medical profession. They're higher paid than physicians. That's probably because there's not as much managed care in dentistry right now as there is in the physicians. And a lot of dentistry is discretionary. So you have dentists that are doing crown and bridge, implant dentistry, veneers, porcelain veneers, full mouth reconstruction, cosmetic dentistry of all kinds. And there's some big bucks in there. Some of these cases are $30,000 or $40,000 or even more. And some dentists are really good at getting those kinds of cases, and they're just doing very, very well, even in today's really bad economy. So if you were to focus on the medical professionals, you could do worse. And we have an expert that we've been working with for a while that we've brought back. Say hello to George. George, how's it going with you this afternoon?
I'm great, thank you.
George, you were telling us a story. I'd love to, if we could share a little bit about your background. Your company has been established in 1980, and all you do is loans to dentists and veterinarians and the medical professionals. How long have you been doing this?
I've been involved in our company since the inception 17 years ago and have done virtually every aspect of financing in the medical arena.
That's really a lot of experience, and I know we have at least I remember one deal we did not long ago, and people were very happy, and I'm really thrilled. I know there's been other ones, and I'm going to be thrilled that we're continuing to work together, and I'm really glad to be doing this training. I really appreciate your time on this. And I mean that kind of background. I mean, you guys just specialize in doing nothing but loans to doctors. And I don't think there's too many people doing that. And what are you finding about the doctors right now? What do you find about their, how creditworthy they are, how easy they are to market to, and whatever? What's your feeling about that?
Yeah, I think it's kind of like you mentioned. It's been an area that's been stable within the economy. It hasn't, it's obviously not recession-proof, but it's a little bit more recession-resistant. And because of that, our programs have not necessarily changed over the course of years. Maybe a little bit in the area of just flat-out working capital, but otherwise we've been able to lend out to virtually all specialties. We do tend to have some difficulties in maybe like chiropractic that just hasn't performed quite as well, but we've been able to lend out to all specialties for practice acquisitions, a doctor looking to purchase a practice. Consistently throughout the years, one of our main products has always been debt consolidations. And if I could stress that a little bit to the people listening in now, that would probably be a great area to focus in on. We consistently do about $3 to $4 million a month in debt consolidations, and that really helps out these doctors who have over the course of years either done their startup financing and they did some sort of graduated payment, and then now all of a sudden their monthly payment's a lot higher, and they've added on some equipment leases and maybe some credit cards. Well, we've been able to come in and lend out as much as 90% of gross revenues, and I think that's in the PowerPoint that we put together.
Yes.
and lend out to as much as 90% of gross revenues to consolidate these debts, put them into as long as a 15-year term. Most all the time it's a lower interest rate, but that's one of those things that kind of sells just on the fact that their monthly payment decreases so much. So it's not always getting into the war of interest rate. It's simply the doctor will be the first to agree that it's not that running a business a lot of times is all about what you take home at the end of the month. So really lower the monthly overhead in that particular case. And then, of course, that's one side to the company. The other side would be that we list practices for sale, and that's something that the president of the company has been involved with over 30 years. And we've, as a company of, I don't know how many thousands of practices we've sold, but we can list practices nationally for sale. And that would be another ancillary area for some of the guys listening in to potentially earn some income. We can, we have a national database of buyers. We have a lot of different channels to potentially find a buyer. And the valuations of practices vary greatly, but somewhere in the neighborhood of maybe 65 to 70% of gross revenues would be a potential sales price, in which that would be another form of maybe commissions to some of your guys there.
Okay, well, we'll get into some more of these details in a moment. Lane, have you worked much with the medical professionals in the past?
Yeah, our company has. I personally haven't done too many of these just because it hasn't been a focus for us, but I've been aware of the program, and I know it's been extremely successful. George, I think you guys have closed over $62 million in loans as of '09. Is that correct?
We consistently close out somewhere between 60 to 80 million a year in loans. Our average loan size is probably, right now, I would say, it's kind of crept up. It seems like we've been getting a lot larger requests, but typically in the past it's been right around 800,000 average loan requests. But it's not to say we're not doing the smaller stuff. The typical startup financing request might be right around 350,000. Equipment lease or an equipment need, or a little bit of expansion for maybe 100,000.
Yeah, and the dentists, their dental field is very moves along. The technology moves along really fast. So the dentists really are always buying new equipment. I mean, like they've gotten into the filmless X-ray machines in recent years. A lot of more expensive dental lasers for treatment of gum disease. The trend in dentistry is for the dental general practitioner to start doing all kinds of things that they were referring out to specialists in the past years. They were referring people out to periodontists. They were referring people out to root canal dentists or endodontists. And now they're starting to do more and more of that in-house in their office. So they need all this special equipment and training and everything to start doing those things. And they're getting it. So the trend is dentists to spend more and more money on capital, on capital-intensive things and equipment and training. So I can see this as a very, very bright future with the dentist, and I'm sure with other professionals. But if I was, going out there right now, I'd focus on the dentists. I think the dentists are a fabulous market for this and have been fabulous. And the thing about veterinarians is they're okay, but a lot of vets are really strapped right now because the people aren't spending nearly as much money on their animals, and a lot of vets, they're not doing as great as well as the dentists are doing really, really well. So I personally would probably focus on working with dentists.
Yeah, I would tend to agree with that. The dental marketplace is a kind of a larger pool. There's almost 3 times as many dentists compared to vet, but the vet marketplace, as far as the forecast goes, it seems by most of the experts I deal with, everyone seems to have a pretty good prospectus for the veterinary marketplace. A lot of practices, even dental, saw a decrease in revenues over the past couple years, and certainly that poses some challenges when you go to get financing, seeing some decreased revenues. However, right now we're starting to see kind of a bottoming out, if not a trend towards increased revenues in the financial statements we've been receiving. So that's promising in pretty much all fields as far as different specialties. But as you mentioned, the dental marketplace is really kind of our strong suit. It really is where our capabilities, financing-wise, just really open up. And I would say that's a prime focus.
Hey, George.
Yes.
How about debt consolidation for the veterinary market also? If they're experiencing tight cash flows, I would assume that would be a pretty good area to market to as well.
Yeah, and that's the thing, is those consolidations, the cash flow model, that we have to hit a 1.25 debt-to-income ratio. This is cash flow-based lending, not so much asset-based lending, where sometimes the confusion with, people that deal a lot with commercial real estate, they would, tend to say, okay, the asset's worth this much. Well, when you go to value a practice, it's more so based on the cash flow of that existing practice. So in answer to your question, Lane, when we go and look at, okay, this guy's cash flow currently is at X amount, and it's really only leaving an excessive amount of so little or lack thereof excess cash flow per month, we're going to base the approval on a forward-looking cash flow. In other words, we're going to take the new monthly payments and now all of a sudden add that back into his cash flow. So those consolidation loans, even though they sometimes are, on first glance at a doctor's practice, it might not look like the healthiest practice, but consolidating out and you're saving a guy $3,000 a month or what have you. I think our record is saving a guy $32,000 a month. This was a kind of an extreme practice, obviously, but we based the projections and the cash flow looking forward.
Right. So, but in other words, it would be if, for instance, a veterinary practice or a dental practice, for that matter, had declining revenues, and it's starting to get tight. If we're coming in here and consolidating and reducing their monthly expense, it's obviously a good thing for them, and it could potentially make this loan work for them and work very well, because we're gonna improve their cash flow, improve their bottom line, which is always the goal.
Yeah, exactly.
Yeah.
And that's what our cash flow model will be based on the new monthly payments.
Yeah. Yeah, great.
So, how can you earn with us, basically? How do you make money with us? You're going to make money with us by finding people that want loans, finding practices that want to be sold or bought, and insurance. I guess we're going to be spelling that out then.
That's correct. We can make money by getting thousands of these guys in a day.